Hello everyone, this is Nisha Soni. If you're someone who always gets confused between the debits and the credit, trust me, you're not alone in this. In this video, I will explain the debits and credits in such a simple way that your accounting concept related to that will become clear forever. This is the foundational concept that every student of accounts need to have, because no matter what you do, you will always have to have this concept of debit and credit clear, so that you are a good student in accounts and then you move on to become a good accountant as well. So first, I'll tell you one important thing. Debit and credit actually do not mean plus or minus. Okay, debit or credit, they actually mean the left side or the right side of an account. In accounting, we are following double entry aspect of accounting. Now, what do we mean by double entry aspect? Double entry aspect means that every transaction has two-sided impact. One account is debited and the other one is credited, right? And that is why it is important for us to understand very clearly that what debit and credit would mean. Okay, the decision related to which account will be debited and which one will be credited depends on the golden rules of accounting. Now, the mantra for accountants is the golden rule of accounting. So we got three golden rules of accounting. For real account, the rule is debit what comes in and credit what goes out. Under real account, every asset will be recorded. When I say asset, that means maybe a purchase of cash, any asset the company is buying, any sort of money that a company is about to receive, for example, AR, accounts receivable. So all these are the assets. And when we are talking about an account which falls under the category of asset, the rule is going to be debit what comes in, credit what goes out. Second one is personal account. Personal account basically that account that will involve individual, the clients, the vendors, the customers. Okay. For personal account, the rule basically is debit the receiver and credit the giver. Nominal account contains all the expenses, income that the company is able to generate. And for nominal account, the golden rule is debit all expenses and losses and credit all incomes and gains. So these three golden rules are sort of building blocks of accounting, and we have to very well understand these. Now, how do we decide the which account will be debited and which one will be credited is very important. Then only you will be able to prepare proper journal entries, check correctness of transactions, do reconciliation, or whatever the purpose you want to serve. Now, we will not memorize this actually. We will try and understand this with the help of example. So I'm taking first example. In my first example, suppose that Ram is actually starting a business with Rs 1 lakh. Okay. So the first thing for us is to understand which two accounts are getting impacted. Sorry. Ram is investing cash in the business. So two accounts that are going to get impacted are cash and Ram. Cash is real account, and for real account the rule is debit what comes in, credit what goes out. Cash is coming in, so cash will be debited, and Ram falls under personal account. Debit the receiver, credit the giver. Ram is the giver, so Ram's account will be credited. Okay, so the correct entry for this will be cash account debit to Ram's capital account, because the amount that Ram invests is the capital. That is why Ram's capital account will be the correct head to credit. Okay, I hope this is clear. Now, right now we will not focus on the format. We are just trying to understand the logic. I'll give you another example. Suppose a company bought laptop for office. Again, the things come to the same question. What are the two accounts getting involved? So the two accounts are laptop and cash. Laptop is asset. Debit what comes in, credit what goes out. Asset, laptop is asset. So laptop will be debited, and because cash is going out, being real account, it will be credited. So the correct journal entry for this will be laptop account debit to cash account. Again, we have to before preparing any journal entry, two things you will have to understand very clearly. First is, for every transaction, what are the two accounts that is getting impacted? Now you will demarcate that which account is getting under which head. For example, is it real, personal or nominal? And once you crack this, you're all done. The journalizing part will be very, very easy for you. Now, we'll take another example. In another example, I've taken that suppose office rent is being paid. Okay. Every expense, as already explained, is a nominal account, and every expense in nominal account is to be debited. The other account that is being involved is cash, because we need to pay cash, right, to pay the rent. So the correct entry for this transaction will be rent account debit, because it is expense, and cash account credit because cash is real account and cash is moving out. It is very easy. Once you are understanding, identifying the accounts clearly, debit and credit becomes very automatic and easy for you to understand. If you find